Hello and welcome to FinTech Diary. The world of FinTech is evolving constantly, and we at FinTech Diary try to map these trends for you. My name is Amol Dete, and my guest for this chapter is Ruchi Kalra, full-time director and chief financial officer, Oxyzo. Oxyzo is an unicorn FinTech operating in the B2B lending space. Ruchi, glad to have you. And let me ask my first question, which is actually the basic question that every FinTech or the startup is being asked by everyone. What is the solution that you are offering, or what is the problem that you're solving? So, Ruchi, tell me something about Oxyzo as a company, what exactly you're doing, and what's your background?
Okay, so Oxyzo essentially started with solving for working capital solutions for SMEs. These could be any entity which was between, say, a 20 crore to, say, 300, 400 crore as a turnover. And these SMEs primarily were in the traditional ecosystem, like a manufacturer or subcontractor. And we saw that there was a need for working capital solutions that was actually, even though banks existed, but more from an NBFC perspective, we didn't see the working capital solutions actually being there. And hence, we actually deep dive. We launched something which is called purchase financing, that you actually take financing from us to buy raw materials where the money is directly paid to the supplier, and you could actually get the raw materials down and on your doorsteps. And that's essentially the start for Oxyzo. Since then, Oxyzo has actually expanded significantly into other product categories, other, you could say, other target segments as well. And in addition, we've realized that there are a host of other financial services that we can actually bring to the SME as well as the mid-corporate that we are actually building upon.
Okay, sure. Noted your point. So how has been your experience since you started this company? Because recently I have seen a great rally specifically from the large financial institutions as well, like banks and BFCs, entering in the SME, not just a mid-level or a traditional SMEs, but even a micro MSMEs and the SME segment. So how has been your experience in this space, and how are you looking the demand from the SME side right now in terms of business, Ruchi?
Somewhat in terms of the overall offering, if you look at off business as a group, we've always looked at an SME saying that how can we go beyond just offering them one solution? Like, for example, off business offers buying solutions in terms of raw materials itself across host of value chains. Similarly, Oxyzo aims at saying that, okay, we will finance your working capital needs across different types of solutions. So for us, actually a combination, thinking about the client first and saying, okay, you want to raise capital, we'll give you debt. Or if you want some other institution, we'll partner with other institutions to get you debt. Or if you actually want to actually raise money from capital markets, we will enable that. Or if you want supply chain solutions, we'll enable that. So because of thinking through saying that this is what the client needs, we believe that we are able to bring together a very strong proposition to our clients. And you're absolutely right, SME is a space that has been growing because of a lot of things, whether it's the government schemes which are enabling it, whether it's the China +1 story which is enabling it, which is manufacturing growth in general in terms of consumption in India, because there is growth in India as an economy itself. So we believe that at least the core segments that we are present in today are something that have seen stability during the COVID period as well, and are going to see growth going forward. And yes, it's a very attractive segment. In fact, all our customers, most of them are banked customers as well, right? But the credit need will continue to grow across different sources of capital, primarily because of the growth that we're going to see in the ecosystem.
Okay, just to get a sense in terms of the velocity of your business, I do understand that you're operating in a B2B lending space, and you also told me that 20 crore to the 400 crore is the cap of the SMEs that you look at. Could you tell me how many loans are you disbursing on a monthly, weekly, or a yearly basis, and are these typical working capital, or also you are financing them for their maybe capex or some other portfolio loans or something like that?
So I think as a financial institution, we believe that even if we started with a single product, it was very important to diversify and actually add different product segments, right? So what we started as what we call purchase financing, in the sense we pay to your supplier gives you material, you pay back in 90 days. So it's like a very high throughput kind of a product that we had, right? Short tenor, rotating like a bank CC and WCDL, that was our first product. Then we further expanded to saying that how can we give tenor loan either for buying, say, you said capex, or against property, which is going into the business itself. Thereon, we said, okay, how do we give growth capital, and so on and so forth. So yes, we have all the different products in whatever an SME would require from a portfolio perspective. But yes, we have a much more indexed towards working capital solutions as a financier. In terms of our balance sheet, we closed the March at around 4,800 crores in terms of the overall loans and advances, if you were to say. Overall asset size for the business crossed at 5,000 crore plus. We did raise our equity, and hence the balance sheet is very well capitalized with a net worth of close to around 2,300 crores. And last year, as a business, we made a profit of around 197 crores as PAT.
Yes, I could see that and followed the headlines. In fact, you had also filed that copy, the gigantic profit that you made around 198 crores. Ruchi, congrats on that front. But specifically when it comes to the lending, do you lend on your own book, or you have partnered with banks? I can see the list of the banks that you have partnered with for the under the debt structure. So how has been the bank's stake when you lend to the SMEs? Is the major proportionate of the loan has been on the bank's book, and the major loan has been disbursed through banks, or it's you, because ultimately you are also an NBFC company, if I'm not wrong?
Correct. So Amol, we have always been a proponent of building our own balance sheet. So for us, the idea is, when we actually talk to a bank, is to, like a traditional NBFC, right? We actually borrow from the banks or very large institutions or capital market institutions. So around 75% of our borrowing will be bank borrowing, wherein the top PSU, public sector or private sector banks would be actually lenders to us. Then we, from our own balance sheet, would be lending to SMEs. Right. So when I say our balance sheet size is 4,800 crores, that is our own balance sheet size, wherein we would have lent to, say, a small or a medium enterprise or a financial institution, or say for that matter, a mid corporate. And this overall balance sheet is 100% on our balance sheet. We're not doing any kind of co-lending, because our thought process was to build a core base of customers, build a core balance sheet, and be profitable. So when we say an ROA of post-tax ROA of a 4.5%, that is our own balance sheet ROA that we have. And hence the arrangements with the banks are more in terms of a borrowing cost. We are rated A+ as an entity, and the arrangements with the SMEs are that we are the lender to them directly.
So, I mean, but there is no direct involvement of bank when you lend.
So the banks lend to us on our balance sheet. So they will do the diligence on our balance sheet in terms of how healthy our balance sheet is. And against that, we would be doing the borrowings from the banks. But we will not have co-lending arrangements, if that's what you're referring to, with the banks, in terms of saying only 20% of the capital is from us, so 80% is from them. That's not how we work. We are a pure balance sheet company. Going forward, we do enable, say, for example, our customer has already borrowed, say, 50 lakhs from us, or maybe a crore from us, and he has much more requirement. And we are not able to fulfill that requirement because we have actually hit our cap. Then we will introduce them to other lenders, which is essentially an arrangement as a platform that we will do. But that's more of a fee business for us that we would enable.
Okay, so because why, Ruchi, I will try to learn more on this aspect, because there are many companies operating specifically in the lending space, and they have different kind of partnerships with the banks. Co-lending is one of them, which is the major one. So just to understand for me and my readers, let me decode, and if you could add. So basically, you have a credit line from the banks, where whatever connect on the partnerships that you have with the banks, XYZ amount of the loan which is you have obtained from the bank, and then you will lend to the SMEs on your book itself, whoever the SMEs is, at the rate that you are comfortable with, right? That's how it works.
Correct. That's how actually most NBFCs work in terms of building their balance sheet play. Yes. So for us, Amol, in terms of technology, it becomes very, very critical, from saying how do we keep our OpEx lower? How do we ensure that when we are underwriting, how do we actually do our bank statement analysis faster? How do we actually map out all data points that we either get from, say, a Karza to, say, a probe, to everything in terms of reconciliations? But we have that element of a traditional financial institution, which involves both in terms of high touch with our customers, in terms of our underwriter meeting the customer and so on and so forth. But at the same time, also ensuring that the balance sheet that we're building is from our own balance sheet, our own book, and hence building the income corresponding to the balance sheet we have, an expense corresponding to the borrowing that we are actually taking.
So thanks for the explanation, Ruchi. Tell me something, considering the credit growth numbers are really high for the banks,
Yeah.
but at the large level, the big loans are not happening because the banks are still, in a way, not looking at the gigantic growth from the corporates because no big loans are happening on that side. This is one story. Second story, which I also see, is this that though the RBI has given a pause on the lending rates, there are still doubts whether they will increase in future or the rate will continue. So still the stability is there. With this background, do you think or do you see by any chance the cost of funds have gone up for you? And that is one part. And second if is the bank the whole source for you to raise funds, or do you also explore some external options maybe to raise funds?
So, Amol, you are absolutely right that in considering the recent increase in the repo rates, the cost of borrowing for all institutions across NBFCs has definitely gone up, because for banks itself, their MCLRs have been actually pushed up, right? And that is true across the economy, whether it's an individual borrowing, whether it's an institution borrowing, or a financial institution like us borrowing. So, in this kind of a scenario, which is a rate increase scenario, the first is how do you optimize across where are the different sources of capital? Where are you borrowing from? So yes, we have a mix of public sector as well as private sector banks. We also actually borrow from capital markets, right? So a mix of the instruments that you use, a mix of the pools of capital that you tap becomes very, very important. Second is the kind of borrowing you're doing, because we are ourselves a working capital lender. So do we borrow more as long-term loan? We actually borrow a combination of CC and WCDL so that actually we can manage our, you could say, a cost or drag, as they say, on our balance sheet, right? On our P&L, sorry. The third part of this is saying that how much of it can you actually balance by managing your operating costs? So for us, our operating costs are close to 2% of the overall AUMs, and that's something that's very, very critical for us. So as the operating leverage come in, and the last part is that how do you have your relationship with the customers? Most of the NBFCs or banks are actually on floating rates for most of their requirements. So hence, when say, for example, a bank MCLR goes up, it translates into the customer paying a little higher. So what part of our, you could say, we say OBLR changes, and how much of that can be shared between the customer? Because when there is a rate benefit, they'll get a rate benefit. When there is a rate increase, then actually that is partially shared by the organization and partially by the customer. So there are different mechanisms. And yes, at the end of the day, what matters is your overall return on assets. And to optimize for that, few of our most important levers are that how are we very risk conscious? So hence our cost of credit, or you say credit loss, is minimal. So for us, our NPAs are 0.9%. The second thing is how do we manage our OPEX such that it is at the end of the day, if my OPEX is better, credit cost is better, then I can offer a better rate to the customer, right? So what we offer to the customer, say if we are lending at around a 15% or so, then, or 16%, or in that range, depending if it's secured or unsecured, then how do we actually create that bottom?
Okay, sure. Thanks for that meaningful explanation, Ruchi. Tell me something now. You have been operating in this space since quite some time, and you're a profitable entity as well. Not everyone is profitable, though everyone trying to be a profitable and everyone trying to be profitable, because lending is the only business where they think that they can make money. How long did it take for you to become profitable, and what strategy actually paid for you, to earn the gigantic profit that you just did?
Yeah. So, Amol, honestly, we've been very thorough believers in the fact that a financial services business, primarily a lending business, has to be net worth accruing, right? Lending is one of the oldest businesses, if you were to say, right? And it's been well thought through in terms of what are the building blocks. And if your building blocks are right in terms of saying you're putting the right operating cost to originate the right amount of loan, to saying that my credit costs need to be managed. So hence it's a very fine balance between sales and risk, right? It has to be, that balance is very important. And more importantly, saying that as you are evaluating a customer, what is the risk, you could say, metrics that you put in? And once the loan goes bad, how much do you put in to actually collect that? So for us, all our functions have been in-house, whether it's been collections, whether it's been underwriting, whether it's, sales. And because most of these functions being in-house, because we actually build from the fact that financial institution has to be profitable. as it grows, right? It's more a philosophy thing that has actually resulted in us being actually profitable from year one on the lending business itself. In fact, as a group itself, the philosophy is very clear in terms of whatever we do on a transaction by transaction basis should be profitable. And I think that's the philosophy which percolates down to the NBFC or the financial services business as well. And I think in the space we are in, 4.8%, 4.5, 4.8 to 5, that's a range that we want to operate as a post-tax ROA is something that we'll continue to strive for.
So we understood your business model, how you became profitable, and your philosophy behind this lending business, Ruchi. With this background, I would like you to tell us what next for Oxyzo, specifically when the environment is not that great. You're profitable, so perhaps you will not face major challenges, but there are a lot of fintech struggling in terms of raising funds. The regulator have also become very active, specifically with the digital lending guidelines and all.
Yeah.
Given this background, what next for you? What kind of growth do you see for yourself?
So Amol, we kind of classify ourselves more as a tech-enabled financial institution than a pure play fintech, so as to say, right? Because we build our own balance sheet, so as to say, and the processes that we follow. And for us, from a lending philosophy or a financial services philosophy, the first and the foremost thing is that you continue doing what you're doing, because if you are originating yourself, you continue doing that. You are underwriting well, you continue doing that. And you are building a region, you continue doing that. So for us, whichever region we are present at, we have to just go with the mindset and continue to say that we are continuing to do whatever we do, right? That's the first part. Second is in terms of from a growth perspective itself, our core segment, which is lending to, say, traditional sectors of the economy, is something which is a cornerstone for us, which we actually want to grow on both sides. If we are SMEs, then we can do micro. So that's one side that we'll expand to. And when we are doing SMEs, we'll actually continue to expand to the mid-corporate segment as well, right? So hence that span of the turnover range, the span of saying what are the customer doing as an end objective is something which is going to expand. And hence, for us, the product suite that we offer, like you actually asked initially, is something that is expanding from saying working capital solutions to tenured loans to actually structured loans and so on. So that is something that will expand as well. From that point, we've actually invested in technology as well, from saying a supply chain platform, our own capital market solutions as well. And that's something in terms of our DCM desk, as well as other tech-based solutions, is something that we will continue to expand on.
But any in terms of the further expansions, are you going to cater to maybe a larger segment? Are you going to have more partnerships? Are you going to raise more funds? Are you looking at IPO as one of the, a lucrative proportion going ahead, Ruchi?
So for us, the amount of funds that we raised last calendar year actually was well sufficient to actually build $1 billion balance sheet on our core balance sheet, right? And this will involve, for us during the course of the year, involved in terms of raising debt significantly than raising equity for now. So that will stay the focus for Oxyzo itself in terms of its growth trajectory. In terms of raising funds further, I think next fiscal is something that we will definitely look forward to, in terms of, again, from the perspective of saying that, okay, how do you build from $1 billion book to a much larger scale, and at the same time, how do you keep adding more financial services to your suite of offerings? Okay,
but what's your overall outlook specifically for the SME space? As I said in the beginning, and you kind of agreed to it, that that space has become very competitive now. A lot of institutions are entering in this space. That is one theory. But on the other side, the government is also pushing, the micro SMEs and the, MSMEs in this segment, which is not a bad thing at all. But the worry that the economists and the financial analysts have is that there might be delinquencies, which we still didn't know about it. So considering these two thoughts, Ruchi, how do you look at it? What is your observations or outlook?
Yeah. So Amol, I think if you look back, to define any future, it's also important to analyze the last 6-7 years of how lending has been, or overall financial services has been. And I think financial services as a space has gone through a lot of ups and downs in the last 5 years, right? Whether it was the crisis triggered by ILFS, whether it was COVID itself, whether it was other things that came in between, right? And when you see these shocks and you see that the sector has been resilient, right? I mean, even in COVID, there was a lot of delinquency which came different people's way, right? And if you look at from a sectoral perspective, the ability to absorb these shocks, whether it's on the P&L, whether it's on the balance sheet, has been significant. And I think the regulator has a very strong role to play in it, in terms of the policies, in terms of the reviews that they have been doing, and how active they are in overall lending financial institution space. Keeping that in mind, I think we have to look at the next 5 years more from a perspective of growth, because the economy is growing, and for the economy to grow, it's very important that there is the right kind of funding happening at the individual SME space, because they're a very, very important aspect of the growth of the economy, right? Whether you see in terms of government pushing for money in the infrastructure sector, the various PLI schemes on the manufacturing space, etc. I think the next 5 years has to be looked at more from a growth opportunity than worrying about delinquencies, because the fact is people are smarter, much smarter after COVID as well, even in the fintech space or financially, or any kind of other financial institution. So I would categorize the next 5 years more from a growth and obviously cautious growth perspective.
Sure. On that, I just want to also want you to also add is, how do you see the growth specifically for India and Indian fintech sector? Because current situation is obviously everyone is optimistic and bullish, but on the ground the situation is a little different. The companies, those who are in the lending space, are also trying to get into consolidation. There are large companies who also wants to look at small companies, maybe in an acquisition mode. And there are a lot of those companies are unable to raise funds as well. So broadly, we are positive. Broadly, we think that the fintech innovation is transforming the whole financial landscape. Do you see such challenges also, maybe?
So Amar, I think there's a very broad brush which comes together when we say fintech as a space, right? If you say fintech as a space, fintech as payments as an engine, right? Which has completely transformed the way you and me even buy stuff, right? We go to a store and we can just make a payment on a click of a button, right? So that's all fintech from a payments perspective. On a lending perspective, because that's where we are focusing on right now. In lending also, I think technology has been a very, very important part for a bank lending also. The way a bank lends also has changed today. How we do our analysis has changed today. How we lend and identify customers has also changed today. So I think there are very, very positive areas from a use of technology in the financial services space, which is what we should build on. And hence, coming back to your question, I think if we use our technology to reduce OPEX and not to increase our operating cost, right? If someone is using technology to say, how do I get more data so that I can underwrite better, than saying that it's all only technology driven. So I think the combination of what we have learned across hundreds of years of lending, saying that how do we use technology to actually enable and make it better and faster, will always lead to a much positive outcome than just relying on technology to just completely eliminate our understanding. And I think institutions which can actually take the right balance of both and actually go and say, how do I become more profitable? What are the levers that I need to push, and how does technology enable those levers? Would be a better way to say that. How can people become and capitalize on the growth that is actually going to come further?
Noted your points, Ruchi. I think, and I'm done with my questions about Oxyzo, or maybe partly with our business and the whole business strategies. But before I close, I would like you to maybe give us some leadership lessons, some thoughts in terms of what drives you, what really likes you, what motivates you, what makes you come to the office and disburse the loans to all these thousands and hundreds of SMEs on a daily basis. So what is your philosophy specifically about life, and what drives you, Ruchi? If you can give us some leadership thoughts to our viewers and readers.
Yeah. So Amol, for me, coming to office, I've been a consultant before this, like for 8-9 years, and before we actually started as a full team, right? And I think coming to office or coming to any place which has Oxyzo in it actually is completely governed by its people, right? I'm sitting here and talking about Oxyzo, but essentially every part of every loan that has to be dispersed has to be originated by someone, right? And when you have a set of people who have a common philosophy, right, and a common thought process, and then everybody is working not for an individual, but working towards a company, right? For all of us, including me, work for Oxyzo, right? So it's the company that we are working for than for individual people. And I think that's what makes me very excited to come to office every day, that even if there is a conflict, you will be able to resolve it because you will say what is right for Oxyzo to do, right? In the short term, in the long term, what's right for Oxyzo. And that core belief, I don't think it's a leadership lesson, but it's more about saying what excites me is the people that I work with, the people that we see day in, day out. Because every time, if you just see with what commitment they're working, you feel that there's so much to learn from them. Even if you worked in your life for 15-20 years, you will feel that, okay, there are new ideas coming about, there are new ways of doing it, and there are people who will actually prioritize the company over any individual. And that thought actually excites me a lot, and that thought pushes to create the institution, the name of the institution, much beyond individuals, right? And that guiding force is something that I believe is the charm of working at Off Business or Oxyzo.
That's quite meaningful, Ruchi. Noted your points. Thanks for sharing that part specifically with high energy and excitement with us. I'm sure the readers will carry that and note that for sure. So thank you, Ruchi, for taking our time and sharing your experience and the business strategy on the FinTech Diary. Thank you so much.
Thank you, Amol. Thanks so much to you and the team for having me on this. Thank you.